Welcome to Fun with Annuities with your host, me, Stan the Annuity Man, America's annuity agent. Can annuities be fun? Can contractual guarantees be fun? Absolutely they can. Find out the brutal facts about annuities with no sales pitches or high-pressure nonsense. Just the brutal and factual annuity truth, which is all you need to hear. Let's have some fun with annuities, and let's have that fun start right now. Welcome to Fun with Annuities. I'm your host, Stan the Annuity Man, America's annuity agent, licensed in all 50 states. Very happy to have a good friend of mine from way back in the day, but he's still out there kicking and doing his thing and providing a lot of good information. Charles Rotblut from American Association of Individual Investors will be our guest today, but let me tell you a little bit about him. He's the vice president of AAII and the editor of their journal. It's called the AAII Journal. We'll have all of his contact information and the AAII site on our site for you to go to 24/7. He's a vice president there and a financial analyst, and he's the creator of what we're going to talk about today, which is the PRISM wealth building process. And he's been an editor of their journal for just a long time. I've written for that. I enjoy reading it. He's created a ton of stuff for the American Association of Individual Investors, like VMQ Stocks, AAI Dividend Investing Services. He helps manage the Stock Superstars report. He's just been all over the place. He went to the University of Kansas, go Jayhawks, and you've probably seen him on CNBC, and he's, does Keplinger's Wall Street Journal panelist. He's written a lot of books. One of his books, Better Good Than Lucky, I really like that because it talks about the stock market, etc. He's worked for Zacks, Invest Tools. He's done a lot. He's a chartered financial analyst, CFA. If you don't know what that means it's really hard to get, and really, really smart people get it, like Charles. But a little bit about AAII, and then we'll jump in. It's an independent nonprofit corporation formed in 1978 to assist people like you, individual investors, to become effective managers of their own assets. And how they do that is they provide programs of education, information, and research. I want to welcome all the people on the major podcast platforms and the YouTube channel that says Fun with Annuities at the top of it. Charles, welcome to Fun with Annuities. Thank you so much for being here.
Thanks, Stan. It's great to see you and great to speak with you.
I know. It's been a while. I've actually sat in his offices in Chicago. He's got this really swanky office, but he's earned it, man. He knows what he's doing. Let's jump right in. I'm very fascinated to what you've built, this PRISM wealth building process. And if you want to go to AAII.com, you can pull that up. We're going to have the link to this exact learn and plan strategy. Tell us a little bit about that, Charles.
Sure. The origins really came from us trying to think about what do investors need to succeed. And one of the things we thought about was that individual investors really need a framework. A lot of people have big goals they want to save for, but then they get distracted by these shiny objects. They get distracted, say right now, as we record this, the news in Russia. They get distracted by their political beliefs. And certainly the headlines day to day, you can turn on any financial news outlet, regardless if it's broadcast, if it's online, and it's always buy this, do that. And there's never really a discussion about what's your time horizon? What are you investing for? What's your risk tolerance? And so we wanted to give people a framework. And I realized in creating this, some members want us to say, tell me to do A, B, and C, and I'll do it. But the reality of the matter is everybody's got different goals, different levels of wealth, different levels of cash flow. So a financial plan is never one size fits all device. So what we did with PRISM is we really created a 5-step framework that empowers people to invest based on their goals. So regardless if your goal is short-term or if it's long-term, we're going to give you the framework and we'll give you suggestions on what should go in that framework, but we want you to actually create your own financial plan that's tailored to your goals, because ultimately for individual investors, success is having enough money to achieve the goals that are important to them.
And I think it's important for people to understand that, yes, 95% of our listeners are on podcast platforms, and they're not visualizing what I'm looking at. but there is a flow chart that he has developed. And also what I was going to ask you is, tell us about the academy that goes along with this Prism wealth building process, because it sounds very good in concept. How do you take the person from start to finish, and then after finish, managing ongoing?
So that's something, a new initiative for us. And so we recently developed what we call AI Community, and it's basically an online forum for AI members to interact online. So we're trying to break down our geographical boundaries. We do have local chapters. They're volunteer-run groups, and they're great. But we also want to provide an additional avenue for members to communicate. And so Academy exists in that framework. And inside Academy, we have a series of videos, a series of webinars. Each step in the PRISM process has its own worksheet. So for instance, we talk about prioritizing your goals. We give you a sheet to write down your goals. There's one off-quote study that says if all you do is write down your goals, your odds of achieving them go up by 40%. So we give you everything you need to create your framework, but then you also have this community where you can see what other members are doing. If you want to discuss what you're doing, if you have a problem or a challenge, you can actually go in there and communicate with other AI members. So it really is an interactive experience for members to not only go through the process, but to really learn from other members, learn from me, and share their experiences.
And step number one is prioritizing your goals, and that's a pretty broad brush. How do you make the person dig a little deeper, other than just saying I'd like a reasonable rate of return? I mean, how do you get them down into the details of reality?
So we ask them to walk through, and we ask them to consider, what are your goals? How far in the future is it? How much do you think it's going to cost you? And also, how long do you think you're going to spend on it? And then we ask them to prioritize them. And prioritizing is a really big goal, because you might want to really, for instance, help your kids or your grandkids pay for college. Mm-hmm. But if you want to avoid eating cat food in retirement, that's got to be your top priority goal. And you really we encourage people to really think through it and make those hard choices. It might be really nice to help your kids or your grandkids. Perhaps you want to help your congregation or a certain charity. All that's really noble. But if you can't afford, say, to fund retirement, then you need to assess what's really important to me. And so we ask people to really go through this thought process. What are my key goals? And maybe your key goal is, hiking Mount Everest. And if so, that's great. But realize that requires choices. And anything you do with money is a trade-off. If you save, you're not spending. If you're spending, then perhaps you're sacrificing your future. So we really ask people to think through that and really, do the best estimate of how much will you really need to spend and over what time period, because that really affects a lot of your other decisions in terms of what you do with your money.
Step two of the process is recognizing your risk tolerance and allocation. That's a tough one too. And you've been doing this for a long, long time. People recognizing their risk tolerance, they might think they're less risky than they're acting, right?
Yes, absolutely. It's interesting. When we did this, I looked at a lot of risk questionnaires. I know, Stan, you've seen them yourself over the years. And as you know, a common question in these risk questionnaires is, if the market drops by X%, how will you feel? And I think that's one of the worst possible questions they could ask. And the reason why is there's studies showing if it's sunny outside, if it's stormy, if you got in a fight with your significant other, if there was traffic along the way, all those things impact how you react. So one of the things we ask in there is, how have you previously reacted? If you freaked out when the market went down in 2020 because of the coronavirus, in 2008, that's going to play a role. But we also ask people to consider what they're spending relative to their wealth. Do they have other sources of non-portfolio income and matters like that? So we're really trying to get people to think about what's their ability financially to withstand risk, but also psychologically. So we're asking, again, how they've reacted in the past, but also I ask them about their knowledge under the concept that if you understand market history and you see the market in a correction, then that's pretty normal volatility. That's to be expected. But if you don't have that familiarity, you might be more willing to panic. And so the idea is we're really trying to get people to assess where they are based on what they've done historically, based on what their financial abilities to withstand risk, and also their knowledge. And we give them a grid rate, really going from have a very low tolerance for risk to a very high tolerance of risk. So we try to approach it in more of a holistic manner, but using real data when possible to help people really decide where their risk tolerance is. Because as you said, some people might believe they have a high tolerance for risk, and in reality they don't. And other people might feel like they can't withstand a lot of volatility, when the reality is, from a financial standpoint, they can actually accept a high level of volatility in their portfolios, but psychologically, they may need to dial down the exposure to volatile assets like stocks just to make sure they can stay with that allocation over the long term.
Right. Step number 3, and again, for everyone out there, we're going to have this on our site, the Prism Wealth Building System that Charles Rotblut has developed for the American Association of Individual Investors. And I'm going to encourage you to consider joining, at least utilize their site and read Charles's articles. He's a prolific writer and he's a very good writer. But step 3 jumped out at me, Charles, identifying your investment management preferences. Does that mean managing it yourself or having someone manage it for you, or a combination of the two, or am I missing it altogether?
That's actually hit it just right. So it's really, how is your investments going to be managed? And we stuck it here because I kind of view this as a funnel. So you have your allocation. Okay, maybe I'm aggressive, maybe I'm moderate.
Mm-hmm.
But before you fill it, you might want to think about, well, what preferences do you have? We have a lot of our members who are very active stock pickers, but you might find looking at charts or reading corporate earnings reports to be the most boring thing you can do. Or perhaps you're just a big believer in John Bogle, where you want to purely index.
Right.
So we want people to think about how involved they want to be, how they want to make decisions, but then we also prompt people to think about what restrictions they have. A good example is you might be a stock picker, but if you're investing through a 401k that does not have a brokerage window, and for listeners who don't know what a brokerage window is, that's a sign that your 401k probably doesn't have it. But that means you have to invest in mutual funds, and that's going to impact what investments you select. So it really is, how involved you want to be, whether you want to fully make the decisions or have someone help you. But then also, are there constraints? And it may be, your ability to invest in a 401k. It might be what a 529 plan is limited to, but certain professions also place restrictions on what their employees can invest in. So we want people to really think about that, because if you just go from allocation to investments, you're looking at about 30,000 mutual funds and ETFs, about 5,000 exchange-listed stocks, and who knows how many thousands of bonds are out there, and that's not touching the whole realm of other investments out there. So we're trying to get you more focused when it comes to selecting investments based on your preferences, and also based what restrictions you might face.
You can tell by just listening to Charles, this is a passion. This isn't a job. I mean, he has been passionate about this since I've known him, and that's been for decades. But I'm looking at the steps, and I look at step number 1, prioritizing your goals, and then step number 2, recognizing your risk tolerance and allocation. Step number 3, identifying your investment management preferences. To me, those are 3 big ones. And I think if you get past those 3, number 4, which is selecting and managing your investments, is a little bit easier than 1, 2, and 3. Am I missing something?
No, and that's the whole point. We want to narrow it down. And I kind of equate it. If you're going to haystack, you're trying to find a needle, you'll be there forever. But if you can take that big haystack and maybe put it down to maybe a small, barrel of hay, or maybe just a little bit of hay scattered on the floor, it's going to be a lot easier to find that needle. So, say for instance, your allocation calls for investing in small cap stocks. Well, if you know that's what you want, then when you get to the allocation decision and you're going to actually look for specific stocks, you can tune out Barron's, you can tune out CNBC, all these things, and go right to a stock screen that's going to find you the small cap stock. So it's really narrowing it down. But also when you get to the selecting process, this is when we start getting into your rules, and perhaps you have a preference for value. Perhaps you prefer growth, or maybe use technical analysis. You can then start overlaying that. But those decisions really come from your allocation needs and then what your preferences are. And even when it comes to selecting investments, if you have a bent towards growth or value, whether you're looking at mutual funds, whether you're looking at stocks or ETFs or say closed-end funds, you already will have those decisions made before you actually start looking for that investment. So you've really narrowed down that vast universe. And I think it adds clarity because you know specifically what you're trying to find versus nothing against CNBC. CNBC is a fine channel, but
Sure.
you're getting a shotgun approach of an investment advice, by whoever's on it on a certain hour. And your goal really is as investors to have this funnel approach. So when you're selecting investments, you're really, looking at a very narrow scope, almost with blinders on, to fill that precise need you need for your portfolio, regardless of what type of asset it is.
So step number 4, you just talked about this, selecting and managing your investments, whether you're doing that on your own or you have someone helping you, et cetera. And you're hopefully a member of AAII and using their resources as well. Number 5 is monitoring your allocation, which is always tough for a lot of people. And then just looking at the progress of that, and then your life stages. Can you go through those 3 things: monitoring your allocation, the progress of that, and then your life stages?
Yeah, so we went through 3 things on this, and trying to narrow it down. So allocation is basically, is your portfolio reasonably close to your target allocation? So if you think allocation is important, you periodically want to adjust it. I'm a big believer in rebalancing, which is just periodically rebalancing back to your portfolio.
Mm-hmm.
And you can certainly do it by adjusting your portfolio, changing your contributions where they're directed to, or your withdrawals. But the idea is just, and once a year, look at your portfolio. And to use a very simple example, say you're using that traditional allocation, 60% stocks, 40% bonds.
Mm-hmm.
If you look at your portfolio and suddenly it's 70% stocks, 30% bonds, well, your allocation has changed. So you want to take actions to bring it back to that level. When you get to life stages, we want people to really think about what could cause them to revise their goals. And it could be something big. You're retired. Unfortunately, maybe you got divorced, some big life stage change like that.
Mm-hmm.
Or maybe it's something smaller. Perhaps, you have a new child or a grandchild. That might cause you to reassess your goals. So as a simple example, say you're younger, you have one child, and one of your primary goals is to help pay for college for that child. All of a sudden, child 2 comes along. Obviously, you'd want to help that child with college expenses as well. That changes your goals, which makes you go through the whole process again. How does it alter my other decisions? So we want you to think through that. And we actually create a pretty comprehensive checklist of just little things to look through, because it can, change your family status. Say, one of your kids got divorced. Well, that might mean you need to revisit all your beneficiary information, or perhaps even your estate documents. So a simple checklist. And most years people are going to go through that. No, 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 no. But the one time there's something on there that says yes, it can be a reminder that, hey, I need to go back and either look at my financial goals, perhaps my documents, perhaps how have my accounts or my insurance policies titled. And those simple things, even though it's a very simple concept, those are big things in terms of your lifetime goals and how you want your finances to ultimately be managed and passed along. And then finally, progress is simply helping you decide, are you on track to reach your goals? And if you're ahead of schedule, great, everything's good. But if you're behind schedule, then that can prompt you to look at your goals. Is it still realistic? Do you need to push it back? Or perhaps you need to take actions now, perhaps save more or be a little bit more aggressive with your portfolio. So we view this as really an ongoing living document, not that, I did this and I'm done. We want PRISM process, once you create your own wealth building plan, we want it to evolve with your life. So as your life changes, your goals will change, and so should your investing process. It's never, I've done it once and that's it. The idea is to give you something you can continue using throughout your life.
What I like about it is you don't have to reinvent the wheel. The wheel's already here. Okay.
Yes.
The PRISM wealth building process, you don't have to start from zero. Charles and his staff has done a great job. And this isn't the only thing they have. I mean, if you go to their site, AAII.com, I'll have it on my site. I mean, they have investor classrooms. They have commentary on retirement, tax strategies, asset allocation. They have, in addition to this PRISM Wealth Building Academy, they have a wealth building process toolbox that goes in conjunction with that. And they also have model portfolios, investing ideas. They do everything. I laugh sometimes, Charles, because I see some young bucks out there that'll come up with some app on a phone that says, hey, this is what you need to look at for retirement and to learn about retirement. I'm thinking, wait a minute. AAII was the original people that did that, still doing that very well. And everyone's just kind of copying what you're doing. What I applaud you on is still being innovative and coming up with things, which I'm assuming is a direct reflection of your interaction with your members and what they're looking for, especially with 10,000 baby boomers plus hitting age 65 every single day. That's a demographic tidal wave to me and you. How has AAII adjusted to that demographic tidal wave? Is this just step one of what you guys are working on? What's the future look like for AAII?
Yeah, we're always thinking about what problems do individual investors have that we can help solve. And so we're constantly looking at that. We're constantly inventing new tools. We came out with a My Portfolio tool, which allows members to track their investments. We've enhanced what we offer in mutual funds and stock screens. We're doing webinars regularly as well, Prism, but we're also looking at things we haven't met in holes. For instance, we'll be looking at retirement, boosting, what we have in retirement and really trying to combine that information into a single source. But you are always thinking about what challenges people have and what are people not thinking about. For our April AI Journal, I wrote an article simply, its tentative title right now is 11 Key Retirement Dates. And, it just came up from the simple fact that, you and I have spent many years in the industry, but for a lot of people, you don't realize that, at age, before they reach 65, they need to file for Medicare. They don't realize that, if I don't claim Social Security at age 62, I can have more money in retirement by delaying. Those little things are very simple dates, but if you don't realize when they are, it's very easy to get hung up and really cost yourself, money a lot of times. And so we're constantly trying to think of those challenges, to some of those pit holes that people can fall into, and really just trying to think about what challenges do investors have and how can we solve them.
I laughed out loud as one of your columns came across my desk. I think it was, I forgot, it might have been early this month. And it was, the title of it was, "Where Are Robinhood Customers' Yachts?" I was like, okay, that's pretty funny. Can you give a snapshot of some? You are a very smart person, and I really love reading your stuff, but you do have a dry sense of humor that is fun to read. Can you tell people where you were headed with that title, to kind of tease them to go read your stuff?
Yeah, absolutely. So there's a book written, I guess, in 1940s by Fred Shrewd, which is called "Where Are the Customers' Yachts?" And
right.
Shrewd worked in the financial industry, and he just really went out the whole industry saying how they're basically enriching themselves on the backs of investors. And so it was a play on that. But when you look at Robinhood, we had this whole meme stock craze. I got curious and I opened a Robinhood account, and I think right now my balance might be $100 in there. I just wanted to see what it was like. But for me to get approved for margin, for me to get approved for options was too simple. And they didn't know who I was, and it was just very easy to do it. And I do think, the idea of no commission trading is very beneficial, especially if you're contributing small amounts to an IRA or to a Roth IRA. The problem is when you gamify it, such as Robinhood, and then you obviously throw in things like Reddit, it's very easy to lose a lot of money. And the problem with when you look at Robinhood is they will literally make most of their money from trading, and particularly options trading. And anyone can go to the SEC documents for Robinhood and see these numbers. The more you trade, the more profitable it is for Robinhood. But this is a case where what's good for Robinhood isn't necessarily good for you. And honestly, if you really want to just take full advantage of Robinhood, go in there, buy a very low-cost ETF, and don't do anything else. You'll actually be a cost to them, and really any other broker. I'm singling out Robinhood here, but the whole industry is really based on getting you to trade more and getting you to use more services. And some services are worthwhile. A financial planner or advisor that keeps you on track is worth their weight in gold. But there's a lot of services just really designed to get you to trade more often and be more active. And there's a lot of studies out there showing that the more active you are, the lower your returns are going to be. And I know there's going to be some traders sticking their hand up going, well, I'm really successful. And I would just say, you're the exception, not the rule.
No, I agree with that, and it's don't confuse a bull market with genius, as I always tell people. One of the things I really like about what you do is you lay it on the line. I mean, there's some membership kudos that you get and benefits, but one of them are these model portfolios that you guys put out. You put out some of the great. I really like seeing what's out there. The dividend investing portfolio. You have a stock superstars report. Multiple versions of that. You have a value portfolio. I mean, you have model portfolios that people can look and they can read the report. They can see the portfolio. This isn't just pie in the sky, 30,000 foot view. This is Charles in a fighter pilot mode of showing you what they're doing based upon how they do it and the research that's involved to implement these model portfolios. Can you talk a little bit about if someone signs up to be a member and gets access to the site, and they can join for as little as $2, come on now, tell us about the model portfolios.
Yeah, so it started with our model shadow stock portfolio, and this was started by our founder, Jim Clunan. And he started, I want to say, in 1993. And the idea was the research at that time really came from Fama and French. And for those of you who are not familiar with them, it's Eugene Fama and Ken French. And it's a quick aside. If you just type in Google Ken French database, you're going to find an absolute ton of information about stock returns and what characteristics have worked. It's completely free. Your only cost is you need to know how to use Excel, but there's a ton of data at his website.
Right.
But what Jim really considered three things. A, where do individual investors have an advantage? And B, what does the research show? And what he figured out was that if you look in the smallest capitalization stocks, these are stocks that are really operating the shadows of Wall Street, and you go for a small size and deep value approach, and you just follow buy and hold strategy for that, you're going to do well over the long term. And that portfolio has been in the S&P 500 by several percentage points over the long term. And changes are made just once every 3 months. So that was our original model portfolio. Our Stock Superstars report, that started in the early 2000s, and that diversifies not only by size and by industry, but also by investing style. So we incorporate value, we incorporate momentum, growth at a reasonable price. So the idea is that you're diversifying every which way, not just by size and industry, but also by investing style. We have a dividend investing portfolio that's run by my colleague, Derek Hageman, that looks for stocks with growing dividends, and we follow a value investing approach to that. Our most recent one is our VMQ stocks, and VMQ stands for value, momentum, quality. And it's a factor-based approach. It's really looking at what characteristics have been associated with really long-term advantages in terms of higher long-term returns for stocks. And when you combine value and momentum together, they pair really well because they're just completely different. Value is what's cheap, momentum is what's doing well. And I like to say it actually gives you a glimpse on market efficiency because it tells you what might be undervalued, but what other people are also recognizing that stock as being undervalued. And then we use quality just because we want to get the junkiest stocks out of the way.
Sure. No, I love it. And there's so much more to it. One of the things I really like about AAII, when I say that, is Apple investing, AAII.com. They also have, they have stock screening opportunities where you can do that. But to me, it's AAII as a community, and it's people that are like thinkers, and they're analytical, and they like to do their own research. They're smart enough to make their own decisions, but yet they want to have the best tools in front of them. But the community part helps because at the core of your association there is about education, and that could involve an in-person event or an online event or one of these programs that they can go do 24/7, 365. I think it's one of the best websites you're going to find to dig in and not get lost in a candlestick chart, if you know what I mean. It's the investing ideas that they have, they'll break it down to stock ideas or dividend investing ideas or mutual fund ideas or bond ideas or or ETF ideas. They get that detailed, and even in the education side, it can go to as basic as beginner's guide to stock investing to as deep in the weeds as your brain can take you. I applaud you for that. From the website stuff, and I've known you for a long time, where a lot of the stuff was done at shows and things like that. But your website is really beefed up. What's the future for where you guys are headed for the website?
We're going to maintain it. We're obviously always paying attention to trends, and so we're trying to make it better and better on mobile devices because we know people are using their phones. We know people are using their tablets, but we're also looking, what can we enhance? How can we improve the usability of the website? What content can we add? And we're very blessed to have a very talented marketing team that always has some good ideas and a good eye for web design. Our art director is great with colors and design, and we have talented directors. But it really comes down to, we always consider how investors engaging with information, but also, again, just back to that concept of what problems do they have that we can solve, and how can we make the investing process clearer for them, easier, and just really better empower them to make smart decisions for their own portfolios.
Charles, the last couple of years could be categorized, and probably the next couple of years, as black swan events for sure. You've seen a lot. You've been through market cycles. You've been through market ups and downs. This isn't your first rodeo. What's different in your mind, or is there anything different from these black swan events? I'm assuming we're talking about COVID and the encroachment of countries onto other countries, name the country, right? How are you approaching that from your process and what you're telling the people that follow you?
Yeah, we're trying to tell people just to keep focused on your goals and invest long term. And I realize that can be really tough to do. And it's easy to forget that a lot of these things have happened in some form before. Obviously, we had the Spanish flu following World War I. Yesterday I was talking to my mom. She's a Holocaust survivor, and she was saying,
Wow.
I'm watching what's happening in Ukraine, and it just reminds me of what I saw in France in 1940 and 1941, where people were lining up trying to get out of the country.
Right.
And so these things do repeat. And although history doesn't repeat exactly, we do see it rhyme often. And could there be something down the line that's happened that we've never seen before?
Yeah.
Absolutely. But you can't stay up all night worrying about things. I mean, we can't rule out the possibility in 1 year we'll get massive hurricanes on the East Coast, massive earthquakes on the West Coast, and a solar flare knocking out power across a good part of the world in the same year.
Right.
That is within the realm of possibilities. Is it a black swan event? Sure it is, but it doesn't mean it can't happen. And I think if you're always reacting to what's happening right now, you're going to lose sight of what can happen in the future. One of my favorite investing quotes comes from James Montier at the investment firm GMO. And he once said that if you don't know what's going to happen, don't structure your portfolio as though you do. And I think that applies really well to a lot of situations. Go back 2 years ago or 3 years ago, no one was talking about the coronavirus pandemic. No one was talking about stimulus checks. And even a year ago, no one was really saying, hey, we're going to have Russia invade Ukraine, and you're going to be paying $5 a gallon for gas. And so when you look at these forecasts, these people are so sure something's going to happen. You want to discount it because their crystal ball is cracked.
There's no doubt, but I do call what you do steady during the storm, and you always have been there. I've followed you, and was around in the 2008s, and how you handled that. You're handling it similar. There's been a couple of things that I know that my listeners and viewers want to hear your insight. First of all, is this inflation gorilla that's out there, and now Russia's throwing a little gas on the fire, no pun intended. What's your take on this? That's a broad question to a broad category and a broad subject. What are you feeling your gut feel on where we are with inflation and what the future holds?
Well, two things. One, I'm glad I'm not Jerome Powell.
Oh, my gosh. Oh, telling you, if he
Yeah,
doesn't drink, he might start, right? Yeah.
exactly. But it's interesting because when you look at corporate earnings reports, a lot of people will expect, a lot of companies expect the supply chain issues to ease as the year progresses. I'm not saying anyone's saying it's going to end this year. A lot of people are saying it's going to take until 2023, in some case 2024.
Mm-hmm.
But I think that should alleviate some of the pressure. We do have economic growth, and obviously people are continuing to spend. But I think the wild card is really Russia and Ukraine and what happens. And as we talk, there's debate about what types of sanctions are going to be placed on Russian oil. But yeah, I think it all really depends on do we get to a state where it's a standoff, or where the sanctions just hold as is and we adapt to those, or God forbid things escalate? That's hard to say, but I think on our side, we are seeing some of this really be supply chain issues where we had a huge rise in demand. As we all know from Economics 101,
Sure.
supply and demand, that mix. I do think those things are going to ease, but it's going to take some time. But obviously the Fed is raising rates, or expected to raise rates. We do have economic growth, and the economy should be able to withstand raising rates. But again, rising energy prices in the past have caused economic slowdowns. I think the last time we saw, oil prices above $100 was right before we had the financial crisis. So obviously a little bit worried about what sustained high oil prices might do. But yeah, I can see a path to inflation coming down from where we're at right now. But with that wild card of Russia still being out there.
Russia and China. I think going
Yeah.
into the midterms, that's always weird. You have the midterms, you have Russia, you have Ukraine, you have China, you have North Korea being North Korea.
Yes.
And then you have countries like India that are kind of abstaining from the whole thing. It's been interesting to watch. Obviously, we're in a global marketplace, and me and you can both remember when it kind of wasn't that back in the day. But it is certainly now everything interconnected. And we're going to learn a lot about Russian wheat here coming up that we didn't know about. But I always ask my guests, my celebrity guests like you, about this next topic because it's new. Not that you have all the answers, and no one has all the answers, because no one understands Dutch tulip bulbs. And what I'm talking about is crypto. Some people call it cryptocurrency. Some people say it's not a currency. What say you, Charles Rotblut?
I think until you can walk into a grocery store and buy goods and services, I don't think it's a currency. It's just a simple donation, simple definition, but I think it holds up really well. Most of the people holding crypto are really doing it because of speculative assets, and they think it's going to rise in price. There's parts of the crypto world that actually have appeal and can have some long-term legs, particularly the idea of secure networks.
Sure.
Although
the blockchain technology is legitimate. Right. Absolutely. Right. Yes.
Although I was about to say, although we know it's not quite as secure as some proponents want to make it out to be, as we've seen with some.
We're learning, aren't we? We're learning some things with what just happened in Canada and what's happening right now with Russia. We're going to find out how private it really is, huh?
Yes. I also look at this too, and I think from the NFTs, I kind of look at that as like comic books or baseball cards or watches, or where you have these or Beanie Babies, where you have these collectibles.
Let me interrupt you real quick. Yeah. NFTs, for everyone out there, is a non-fungible token, is what it's called. That's what NFT stands for. I would encourage you just to Google it. But I'm going to let you finish that thought. But someone said the other day that told me that non-fungible tokens is a way for people to force you to use crypto. So I thought that was a unique take on it. But, there's a lot of new stuff out there, Charles. And I think, finish your point on crypto and then answer the question, how are you answering your followers about crypto?
Yeah, so I was just about NFTs. So I do think, when you attach them to a collectible, and, someone paid an obnoxious amount of money for basically artwork that was for free on Instagram.
Right.
I think that's just trendy and that'll go down. But the idea that you can actually use this token to assign ownership to something, that has some interest, because you can obviously, if that develops, you can use it for contracts,
sure.
Perhaps transfer of ownership, property rights. There's some parts to this that actually do have some legs to it. And even the idea of digital currency, I think as it evolves, Right now, you and I use a credit card. There's fees involved. There's delays in payments to the merchant. There's areas of blockchain where it could actually have some future applications that are very legitimate. But anytime we see these huge technical innovations, there's always a lot of companies at the start that go away. And I'm sure very few people remember some of the early search engines such as Northern Lights or some of the initial web browsers that no one can name anymore because things evolved. Google was not the first company to come along in the internet world, but it ended up being one of the biggest.
Well, and me and you went through the dot-com era of when we
Yes.
saw companies that weren't actually companies and had no earnings and had no balance sheet go from 15 to 75 in one day. And me and you that probably grew up in the Benjamin Graham fundamental analysis stage, and we read that book, went, wait a minute, what? What just happened? Do you look at crypto as an asset class or just a speculative managed futures type thing?
I think it's purely speculative right now.
Okay.
We have actually run some articles on it. I actually reached out to the editor of Forbes Crypto Newsletter, and he wrote a great piece explaining the whole crypto market. So we're trying to explain to our members what it is, so at least they understand what they're looking at. But right now, I think it's purely speculative. And, if someone wants to just, they think it might have some money, it might have some value in the future, and they have some money they're willing to risk all of it on, that's fine. I like to joke, but it is true. All my Bitcoin was for free. I think Venmo had a promotion. They gave me like $40. And I think, Coinbase in the Super Bowl, they gave everyone $15. So that's the extent of my Bitcoin. But, if someone really thinks it might have a future and you're willing to purely speculate, then go ahead. But if it's money you absolutely need, I would stick with more traditional assets and not take a risk on something that's so new that really has value because people are assigning value to it, not that there's anything economically backing it right now.
And of course, we're probably tragically wrong, and we'll be on a 40-year loop. Like 40 years from now, they'll listen to these two guys talk about crypto. I'm going out on the record right now that the fact that I don't know anything about it, I always tell people, if I can't explain it to a 9-year-old, then I'm not buying it. And so that means I miss out on a lot, Charles. But it also means that I understand what I own. Kind of like you guys remind if Warren Buffett ran an organization, it would be yours. I mean, because it's kind of that same plotting, very, very just pragmatic approach, which you need to do when investing. Okay. And I always tell people annuities aren't investments, they're contracts. We're talking about investments with Charles. We're talking about model portfolios and stock screening. We're talking about putting a process in place, with this Prism wealth building process that can get you on track and keep you on track. And as I always like to say, stay in your lane.
Yes.
Stay in your lane. Don't get out of your lane. Stay in your lane, even though that turn off looks good to go get that burger and fries. Stay in your lane, right? So
absolutely.
I know that you don't have a crystal ball, and if you did, you wouldn't tell anybody. Are you bullish on the markets here because of all the cash on the sidelines? Are you bullish because of earnings? Are you bullish because we're coming out of a COVID? Or are you just a total bear right here? Are you right in the middle? Which one?
No, I'm actually somewhat optimistic. I mean, part of our sentiment survey, every week we survey our members and we ask them really 3 simple questions. One simple question with 3 simple answers. Over the next 6 months, I expect stocks to be up, bullish, flat, neutral, or down, bearish. And what we've seen over time is when bullish sentiment, not pessimism, when bullish sentiment gets too high, we tend to see the S&P 500 underperform, not go down, because over most periods, the S&P 500 rises. But when bullish sentiment's unusually low, meaning well below its average, then we see the markets tend to do well over the next 6 to 12 months. And that's actually been unusually lower the past few weeks. So that particularly when we look at February. And so that's a very optimistic sign. But I do think over the short term, we'll obviously have to see what happens with Russia. We'll have to see what happens with oil. And but I do expect once we get through some of these short-term issues, I think we are looking at a period of continued economic growth. Not to say it's going to be smooth, but over the long term, I'm optimistic on stocks simply because the historical odds say over the long run, stocks rise in value.
Sure. I also have a feeling, I mean, I tell people this all the time. I'm a very patriotic person. If the United States was in Ukraine's position right now, if anyone ever came on our soil, I pity those people, because you see some fighting you've never seen before. People would, and I defend, both parties. I defend everything. I defend the country. But I also think that when there's really weird times, whether it be COVID, or the times that we're in now, this country seems to get better during adversity. And I think that's what you kind of said, which was stocks are going to be okay. We're going to figure it out. We're going to become more efficient. We're going to be better. Do you agree with that?
I do. And I think right now, obviously, we're seeing more and more electric cars come out there, but that's, you look at the long-term trends. I think when we look at energy efficiency, and I've long said privately that if we can get a grip on just handling waste better, and, people talk about pollution and global climate, but
Sure.
anytime you throw out something, anytime you expel something to air, that's an asset you're not fully using. So, I think that, but I think you can also just look, you mentioned COVID, look at the medical side. I mean, we got those COVID vaccines out really quickly, but it was based on existing technologies. So
Yes.
uh, I'm not a biochemist. I don't have a background in medicine, but you do wonder, you take a step back, if they're learning something from the ability to produce, those COVID vaccinations so quickly, have they figured out some of the RNA technology or just vaccine development that might set them down a new path in terms of medicine? And that obviously can have some huge payoffs down the line as well. And let's all hope that it does lead them down a new path to a safe and highly effective new medicines.
I don't think we'll ever be blindsided like we were. This country learns, and I will guarantee you that the health stocks and the biotech people are skating where the puck's going to be, not behind it. But let me take a second to talk a little bit more about the membership to what you guys do. And I don't get paid a penny. I don't want a penny. I bring Charles on here because A, he's a friend. B, he's very smart, as you just knew and heard. And if you didn't know about him, you know about him now, and you better follow him, because he's one of those people that you need to be reading constantly. But if you want to become a member of AAII.com, just go there. You can join for as low as $49 a year. Okay. I mean, this podcast is worth $49, just what Charles said, for goodness sakes. But they have helped millions of people over the years. I think they've got 150 to 200,000 members right now, of which you're part of that community. But at a minimum, you should join just to get the journal, which Charles is the editor of, the AAII journal. And that's just gold. I've been reading it for a long, long time, and it is solid. It is just should be in your wheelhouse of things that you're looking at, especially for what I call chapter 2 people. You're not working anymore. You're retired or semi-retired, and your part-time job is to manage what you've worked your rear end off to save and put away. Consider Charles and his team part of your team, and that's the reason I wanted him on. And I'm certainly going to have him on again because, as you can tell, he has very succinct and very smart and high IQ insights into what's going on right now in the markets. And this is coming from a person that has seen the markets evolve from not a 24/7, 365 global marketplace. I mean, me and him joked a while back about, we were in it way back in the day when you put in an order and it was a vacuum tube, and you wrote it on a piece of paper, and then the vacuum tube shot to the front desk, and then they inputted it by hand. I mean, I think that's important to have that kind of knowledge, because as I tell people all the time, most advisors out there right now, number one, have never seen a bull market, and number two, Charles and I have cowboy boots older than they are. Don't you agree?
Yes. Although I don't admit I'm that old.
Come on. You haven't changed that. You haven't changed that much. We've been around the block together, and it's been fun. It's been fun watching you. And what I admire about you is you found your home there a long, long time ago, and you've stayed there. It sounds like you're a lifer there. I think they've got the permanent wing there for you, right?
Yes. But, although I will say many people have been there longer than I have. So the nice thing about our organization is that we have a lot of people who've been there for well over 20 years, in some cases over 30 years. So we find great people, they find a home, and it truly is family at the office.
That's excellent. I mean, obviously we're going to have all the information for Charles up for you to check him out, check his writings out. We'll have his article links up. We'll have links out to the association membership, his Prism Wealth Building system that he's put together, et cetera. Now, Charles, one thing I do with all my celebrity guests is at the very end of the podcast, when we've reached kind of that time, I give you the mic. It's called the mic drop moment. And so you've got to hit us with something. I never give you a heads up on it. I hit you late. So you got to come up with it on the fly. Give the people a kind of a mic drop moment on just what you would want them to know. If you had just 30 seconds to tell them something, what would you tell them?
Yeah, I would just say, think about who you are as an investor and never forget that. And when you're getting investment advice, think about who is that person that's giving you investment advice, and what do you know about them and what do you not know about them, and understanding where your limits of your knowledge are and where they're not at can help you immensely over the long term.
That person that you just heard wax eloquent, Charles Rotblut, American Association of Individual Investors, a person that you probably already knew existed, and you can't believe he actually came on my podcast, but he's a good friend. Charles, thank you so much for being with us. We hope to have you on soon. And I want to thank everybody on all the major podcast platforms out there that's listening to us once again every week, and the people that are viewing us on the Fun with Annuities YouTube channel. I will see you next week on Fun with Annuities. Thanks for listening to Fun with Annuities. Please hit the subscribe button and make sure to go to my site at theannuityman.com, where you can run your own SPIA, DIA, and QLAC quotes and see a live feed of the best MYGA fixed rates in the country, and even get indexed and income rider quotes as well. You can also sign up for my 6 annuity owner's manual books, and I'll ship them for free and under no obligation. I also encourage you to schedule a one-on-one call with me, Stan the Annuity Man, so we can have a full discussion of your specific situation. It will be the best brutally factual and truthful advice you will ever get, and that's one guarantee you should definitely take advantage of. So join me next time for the #1 annuity podcast on the planet, Fun with Annuities.